Insight segment. And Abigail, we're just about 40 minutes or so away from the closing bell on a week that I think most people want to forget.
Probably so. It's been a very rough week, especially for risk asset owners. In particular stocks, there really is not anywhere to hide right now, whether it's tech, the small cap, the transports. The banks actually, though, having the best week since November of 2020. But as you were mentioning, Romaine, the NASDAQ 100 down more than 4% on the week, the worst week since March of 2021. Let's bring in Christian Fromhertz, the founder of Tribeca Trade Group and a terrific trader. Christian, great to have you with us on this Friday. So what are you noticing in terms of the tech selling this week? On Monday, it started off very bullish, nice gains, and it's been basically straight down from there, especially for tech names. What are you seeing beneath the surface relative to options?
Yeah, hi Abigail, great to be here. Yeah, there's a couple of things going on in tech. I mean, it's such a big, portion of the S&P that it's kind of really being felt a bit, and it's kind of masking some of the other areas of strength. But tech just seems to be, once we kind of got going for this week, just getting hit a bit and just not seeing buyers come back into the market, especially in the cash portion, just stock trading. It seems like every little move up right now is just being met with some resistance, and that seems to be that we're just still seeing that rotation for now, and I think it's kind of probably somewhere in the middle towards the end, but we're seeing that rotation out of these names and a repositioning into some other names.
And this, of course, has everything to do with rising rates, that 10-year yield backing up about 25 basis points. Its highest level since January of 2020, pre-pandemic levels for rates, so that's certainly reflationary, good for the banks, but not for tech. But you make an excellent point in terms of tech. So the XLK down big time this week, but an ETF that accounts for tech dividends, it's really outperforming.
Yeah, interesting. I mean, this ETF, I've been talking about this quite a bit. It's TDIV, which is tech with dividends. And if you look at the outperformance there, it's pretty startling. And, that carries along with outside of things, it's just overall dividend type ETFs. So DVY is another one too, that is just holding up much better. So it shows you that right now there is some appetite, but it's just not in the higher beta names. And I think until TLT, which is down about 4.2% for the week, until that settles down, then we'll see a little bit more of the risk appetite in stocks. Now, we are seeing a little bit of positioning in options. I do see some blocks going up, but some of them are a little bit further out. We've seen some Snowflake, we've seen some Affirm. We actually just saw a big block of Service now that went up a little while, which seems to be positioned around earnings. So they are taking a few shots in the options world, just not yet in stocks.
Well, speaking of looking out, I know that you like industrials, but for a June call, what do you like about the XLI?
Yeah, I just like how the industrials are acting right now, and they're very close to breaking out. Like if you look at a weekly chart, daily chart, they're very close to breaking out, and things like Caterpillar are acting really well. Deere, which is actually a material name, is also acting really well. So I think that the group could be poised for a breakout, and I think a good way to express that viewpoint is, what's nice about XLI and some of the other sector ETFs is that the options are not that expensive. So something like the XLI Industrials ETF, the June 110 calls, you could get into those right around $4.
Great stuff as always. Christian Fromhertz of Tribeca Trade Group, and you did give us a place to hide, tech with dividends, TDIV. Thanks so much for joining us for Options Insight. Taylor, back to you.
Thank you as always, Abigail Doolittle. Let's get an update.